September 16, 1992, 7:30 in the evening. Outside the British Treasury, an exhausted chancellor steps up to a forest of microphones and admits the unthinkable. Britain has surrendered, not to an army, to a price. Britain had just lost a war that lasted exactly one day, and the winner wasn't a country. This is the story of Black Wednesday, the day one investor bet $10 billion against the Bank of England and won. But here's what most retellings get wrong. It was never a gamble. It was the most one-sided bet in financial history. And by the end of this file, you'll understand why the bank never stood a chance. To understand the trade, you first need to understand the trap. In 1990, Britain joined the European Exchange Rate Mechanism, the ERM, a club where every member promised to lock its currency to the German mark. The pound entered at 2.95 marks. Too high, warned the economists. A matter of national pride, answered the politicians. The rule was brutally simple. Sterling was allowed to drift only 6% below its target. 1 inch further, and the government was obliged to defend it, buying pounds with the nation's reserves, raising interest rates, whatever it took. The problem? Britain was deep in recession. Unemployment near 3 million. Homeowners crushed under variable mortgages. The economy was screaming for lower interest rates. But defending the pound demanded higher ones. One country, two opposite needs. Something had to break. Then Germany lit the fuse. After reunification, Germany was pouring fortunes into rebuilding the East, and inflation was climbing. The Bundesbank, terrified of inflation above all else, raised rates again and again. And every German hike made Britain's position a little more impossible. Watching all of this from a quiet office in New York was a Hungarian-born investor named George Soros. In his right hand, a young trader called Stanley Druckenmiller. Their fund was called Quantum, and it specialized in one thing: finding the exact moment when politics and arithmetic point in opposite directions. Druckenmiller saw it first. If they shorted the pound and were wrong, if the peg held, sterling could barely rise because the ERM band itself capped the move. Their maximum loss, pennies. But if they were right, the collapse would be violent. Tiny risk, enormous reward. Traders call it asymmetry. This was the purest asymmetry ever found in the wild. Druckenmiller proposed a large position. Soros looked at the numbers and answered with 4 words that became Wall Street legend. Go for the jugular. Not 1 billion. Everything they could borrow. Quietly, Quantum built a $10 billion bet against the British pound. September 1992. The dominoes began to fall. Finland broke its currency's peg first. Then the Italian lira buckled and was devalued over a weekend. Traders everywhere asked the only question that mattered: who's next? Every eye in every dealing room turned to sterling. Then came the spark. On the evening of September 15th, the president of the German Bundesbank gave an interview suggesting that further devaluations in Europe could not be ruled out. By morning, every trader on earth had read the same sentence. And to the market, it sounded like a starting pistol. Even Germany doesn't believe the pound can hold. Wednesday morning, September 16th. Before London finished breakfast, the selling began. Sterling slammed into its ERM floor almost immediately. And the Bank of England did the only thing the rules allowed. It started buying every single pound the world threw at it. Picture the scene inside the bank. Officials watching the nation's reserves drain in real time. 300 million pounds bought before 8:30 in the morning. Then more. By mid-morning, billions were gone, and the pound had not moved 1 pip off the floor. The market was swallowing everything. And here's the brutal mechanic almost nobody explains. Every pound the bank bought at the false price, it bought from someone who had borrowed it purely to sell it, someone planning to buy it back the next day, far cheaper. The bank wasn't defending Britain. It was transferring the nation's reserves, hour by hour, directly into speculates' pockets. 11 a.m. The government reached for its second weapon, interest rates, up from 10% to 12%. A move designed to make shorting the pound painfully expensive. The market's response? Nothing. The selling didn't even slow. and that silence told every trader alive that the defense was already dead. Stop for a second and think what that number meant outside the dealing rooms. Millions of British families, already trapped in a recession, watching their mortgage payments jump overnight, sacrifice to defend a number on a currency screen. The politics of the peg had just collided with real kitchens and real bills. 2:15 in the afternoon. Desperation. The Chancellor announced that rates would rise again the very next day to 15%. The loudest emergency signal a government can send. But the market heard something else entirely. That's the last bullet. And some desks swear the heaviest selling of the whole day came after that announcement. By late afternoon, the Bank of England had burned reserves at a pace no institution on earth can sustain. Estimates run as high as £27 billion of intervention, buying a currency the entire planet was selling. And arithmetic, it turns out, does not care about sovereignty. 7:30 in the evening. The white flag. Britain suspended its membership of the ERM. The peg was dead. The pound was floating and falling. Within weeks, it would lose roughly 15% against the mark. The most expensive one-day defense in British history had failed absolutely. In New York, Quantum's position paid out beyond even Druckenmiller's projections. More than $1 billion of profit on the sterling trade alone, earned on paper in a single day. The press needed a villain, and instead found a headline that would follow one man forever, the man who broke the Bank of England. But hold on, did one man really break a central bank? Here's the uncomfortable truth. Soros wasn't even the biggest seller that day. Banks, pension funds, corporations, anyone on earth holding sterling was dumping it. Soros simply moved earlier, bigger, and with borrowed money. The Bank of England wasn't mugged in a dark alley. It stood in the market square and volunteered. The bill for Britain? Officially, around £3.3 billion lost, a figure the Treasury only admitted 13 years later. But the political bill was far larger. The government's economic credibility died that Wednesday afternoon, and 5 years later, the voters delivered the landslide verdict. And now, the twist nobody expected. Freed from a peg, Britain finally cut interest rates. And the economy didn't collapse. It boomed. Inflation stayed low. Unemployment fell for years. Within a decade, economists were quietly calling it White Wednesday, the day Britain was accidentally liberated from its own worst decision. There's a longer echo, too. The scar of 1992 is one of the deepest reasons Britain never adopted the euro. The country that was thrown out of Europe's currency club on live television chose never, ever to rejoin it. One trade, arguably, bent the monetary destiny of an entire nation. And the playbook never retired. Asia, 1997. Pegged currencies in Thailand and across the region fell to the same asymmetric attack. Argentina, 2001. Even the Swiss franc in 2015. The same logic running in reverse. Every time a government defends a fixed price against arithmetic, somebody, somewhere, sizes up the bet. So here is the real lesson of Black Wednesday. And it is not that Soros was a genius. It's this: markets don't respect promises. They respect incentives. When a policy can only survive as long as nobody questions it, someone will always question it. With size, the peg didn't fail because of speculators. It failed because it was already false, and only one side of the trade was allowed to say so out loud. Soros walked away with a profit and a shadow he never escaped: fame, fury, and a lifetime of conspiracy theories. Druckenmiller, the man who actually designed the trade, stayed happily obscure for another decade. History handed the credit, as it usually does, to the loudest name in the room. If this story grabbed you, that's exactly what this channel is: the Greed Files. True stories of the greatest fortunes ever made, faked, and destroyed, told with the real numbers behind them. Next file: the billion-dollar bank robbery that was stopped by a single typo. Subscribe. You want to see how deep these files go.